Hello and welcome back everyone to Stock Market Weekly. I am your host Evan Medeiros for Friday, August 16th, 2024. We're jumping right into it here with some charts this week, but we got plenty to talk about, specifically this V-shaped recovery going on right here in equity markets. No taking a pause, no breather, no retest of the lows. We are just going up and up, and we are making everyone chase this market that was waiting for a little bit of an easier entry back into this, and we are off to the races. So that is front and center topic for this week. Before we get into those numbers though, as a reminder, Warden TC2000, that's the charting platform we're using throughout this video, and it's a platform we support here at the Trade Risk. If you're a new trader, check out the referral link we have in the description of this video. If you're already a user, we've got lots of cool things built for this platform, help you get a little bit more out of it. They just released version 24, got some new goodies to play around with, and we'll be doing some videos on that on the YouTube channel over the coming weeks. So let's get into the numbers here. 1 week returns green across the board, strongly so. 3% for the Dow Jones, 4% for the S&P 500, 5% for the Nasdaq, and 3% for the Russell 2000. Take a look at the 1 month returns. We're back into green territory here for the Dow and the SPY. It is remarkable that just a week ago, right, 8 days ago, we were looking at 10% plus drawdowns. We were looking at individual stocks that were at 20% corrections, and now we have erased a good chunk, if not all, of some of those gains. Take a look at the VIX though. This is for the record books. 50-point drop in about 9 trading sessions. We were north of 60 in the VIX, and we closed going into the weekend here sub 15 for S&P volatility index. Absolutely remarkable, down 5.6 points. Take a look here at sectors and look at how much the technology XLK Spider ETF rallied this week. 7.67% up this week, and it's still negative over the past 1 month, but it's certainly clawed back a lot of those gains. Consumer discretionary financials up 5% and 3% respectively. Even the worst, the underperformers this week were still in the green. That's real estate, that's utilities, that's energy, flat to up about 1%. If we take a look here at our trends of the individual sectors, so this is using our custom smart trend filter indicator. It's available for TC2000 and TradingView users on our website. You can see that you're getting lots of hooks back up here in this indicator. So if we look at technology, for instance, produced a sell signal all the way back here on July 18th. That's when our indicator there, based on trend, based on volume, based on price action, moved to a sell signal. Well, it turned up on Tuesday of this week to a neutral state, and then it confirmed bullish on Wednesday. So we are getting that rounding the corner. We're hooking up in lots of these individual sectors. Same thing with communication services, same thing with discretionary, same thing with financials, right? We're starting to get this turn back up as dip buyers step in and start to rebuild some of these prior trends. So that is nice to see. It's encouraging to see from a broad market strength perspective. If we take a look here at market breadth underneath the hood, 52-week highs, 52-week lows. Remember, we said we're going to be paying attention to this ratio to seeing which way it expands here. We talked about the fact that the number of stocks hitting 52-week highs and lows dried up, and now we're starting to see that expansion take place on the upside. We're starting to see more stocks outpace 2 52-week highs. That's constructive. That's nice to see. We want to see more of it. We want to see it sustain. That's what gives us confidence to really step back into this market with size, right? To ride these trends back up. You can see the percentage of stocks over 50 SMA continues to move back up as well, 63.94%. And of course, if we look at our dials here on the right-hand side, this is just simply looking at S&P stocks that were up on the week, Nasdaq stocks that were up on the week, Russell stocks that were up on the week, as you would expect, right? Good breadth. When the indices are up 3-4%, doesn't always mean all the individual stocks are doing well. It could just be the heavyweights. It was the heavyweights this week, but it was also individual stocks underneath the hood that were starting to do pretty well as well. Broad-based, as some might say. Now, let's take a moment here and thank our sponsor, Investors Business Daily. This is their top 10 from their IBD 50 list. We've got links in the description of this video. Get yourself a digital subscription, pretty cheap monthly fee, gets you curated stocks, gets you editorial content, gets you lots of other goodies available. It's a link in the description of this video. This is their top 10 stocks. You can see great week here. We also put in the percentage revenue and EPS change over quarter over quarter change. You can see, of course, what IBD is great at is curating fast moving growth type names. This is their top 10. Get yourself access. This updates every single day. Let's move on to our macro dashboard here. You can see that we've got the dollar index falling this week. So it's down about 0.5%, helping kind of fuel sort of the upside in equities, the falling in yields, which you can see across the board here. I've got the dollar index, which is looking pretty vulnerable, looking like it could start to roll over here. And if we take a look at the 10-year treasury yield, you can see that's starting to roll back over and still in a series of lower highs and lower lows. If we take a look at commodities on the right-hand side, silver was the big winner. Copper also very strong this week. Gold strong. Oil was up. Bitcoin down just slightly here. So some good action out of commodities as the dollar and the 10-year yield look pretty darn weak. Now, let's get into some individual price action. Let's kick it off here with the S&P 500. And when we analyzed the market last week, we really sort of highlighted this kind of bear flag looking rally here, right? We talked about the fact that the S&P was still in a series of sort of lower lows, lower highs, and we had to really just kind of see how this market was going to follow up this week coming into Monday. And, you know, as everyone takes a breather, right? Like we talked about, as everyone cooled off for the weekend, they got a chance to sort of reflect on the very volatile week, 60 VIX, right? How do they follow up this week? Do we roll back over? Is there a retest of the lows? Does this bear flag trigger? And do we start to come back down to this 4,900, this April lows area? That was one sort of scenario that we kept in our back pocket open mind. And then, of course, the latter, the fact that we could just continue to go up, up, and up in a V-shaped recovery, which we did not think was the high probability situation that the market would take, but it was certainly an open mind experiment of, well, let's see how we come into this week. And Monday really didn't give you too much of a tell. It kind of was a, you know, tight trading range compressed, closed in the middle, kind of a doji sort of situation here. But Tuesday is where you had a little bit of more information, some action to take notice of. We had some economic data coming out as well, but the market gapped up and then really just kicked into gear here and continued to find strength throughout the week. And that really set the tone here to kind of launch us back up and start, you know, retracing a little bit more than you would expect if we were going to continue this series of lower lows, lower highs. Tuesday kind of set the stage here for a little bit of a runaway, and then we got more follow through on Wednesday. And Thursday was a big session with another gap and go. And then Friday, just finishing the week really strong. So on the week now, when we look at the S&P 500, just a week after we saw that 60 VIX, I know I got to keep saying it because it was just remarkable, and a 9% correction, 9.5% correction. Just a week later, we are now up another 4%, and we are suddenly 2% from all-time highs. 2%. So from a 10% correction to a 2% from all-time highs, we are moving super fast right now. Certainly much faster than I would have predicted or thought. This market is really leaving people behind. We talked about this particular day on Wednesday, right? There were a couple of days to take notice, and you had to be quick and you had to act decisively, or you got left behind or potentially got caught on the wrong side of a trade. But this Wednesday proved to be a very important day. This lack of follow through here, this large range kind of outside reversal, where I think lots of folks were either looking for retest of the lows or at very least some type of higher low to get put in at a lower price. When that follow through did not happen and Thursday session really pushed us up, Friday session pushed us up, that was your first kind of clue that there was some strength underneath the hood, that sellers were perhaps exhausted. And then I really think it was Tuesday's session of this week where you had to change gears pretty quick when you really couldn't get that follow through selling when this indecisive Monday session could not lead to lower prices, where we couldn't break this, the low of the prior day or the trend line of this bear flag here, and we accelerated higher with this gap and go. That was sort of the second clue. I think it was those two sessions that really kind of set the tone, and you had to act quick to really catch on to this trend. Otherwise, it was easy to be left behind here. So S&P 500 is now closer to the highs than it is to the lows. We are up in a very quick and order fashion here. So again, it is a tough chase. It's becoming an increasingly tough chase now to want to buy into this market after, seemingly 7 days up in a row. But it is right now a bull, kind of recovery, and the bulls are in control over the short term. We are extended in the short term. If we take a look at Bollinger Bands here, you can see we're very quickly coming back up to the upper end. We're coming right back to this area here. This was the breakdown zone back to start the month of August here. So you can see we kind of bear flagged up here, and then this broke us down to the last leg. We've now recovered it. We're kind of testing this choppy zone right here. So I wouldn't be surprised at this point to see a little bit of a consolidation and pause. But, frankly, I thought that was the likely scenario coming into last week, and we only got 1 day of pausing. So we're gonna have to take everything with a grain of salt right now. The market is clearly catching people off sides, and it's in an uptrend in a markup mode. And so let's plan accordingly, and let's see how the market shakes out next week. If we take a look at the Nasdaq 100, we pretty much have more of the same here. Again, we talked about this kind of bear flag situation again last week, game planning how things are going to start into the next week. Monday, it was very much the same thing, a perfect kind of doji here. Didn't really give us any clues one way or the other. And then Tuesday, of course, we kind of accelerated up. That set the tone for the rest of the week, which just ended very strong here for the Nasdaq 100. Now, different than the S&P 500, we're sort of equidistant right here. So if we look at the Nasdaq 100, we're basically 10%, almost 11% off of the lows here from a week ago. And if you look from the upside here, we're about 6%. So my math's off a little bit. We are definitely closer to the upside than we are to the lows of last week, but we're more kind of, on a relative basis, kind of stuck in this range. We are back to the prior lower high here. So we are, certainly in recovery mode. If we take a look at the weekly chart, you can see, again, we've broken the downtrend that has been in place here over the past 4 weeks. Right? We finally have 2 back-to-back green weeks. And if we go to that daily chart, you can see, if we draw this trend a little bit tighter here, you can see that we clearly have broken out above it. We're up a handful of days in a row. So again, let's respect the fact that at the short term, we've definitely got a lot of chase happening here. But this market is overall repairing a lot of technical damage in very quick order. Russell 2000, again, you can see, we talked about this one as being kind of the easiest to trade from a, major level sort of area to take notice point of view. And it was really this 210 level we talked about last week, where if the Russell 2000 could start climbing back over 210, start getting back into this gap, then it was, easier to flip onto the long side just because the levels were a bit more clear. And again, that really started to happen here on Thursday and Friday. It lagged a little bit. On Monday, it had a more convincing down session. And then that Tuesday, kind of broke it back up to the upside. Wednesday, no follow through. So it was definitely a choppy start to the week here for small caps. It was really Thursday and Friday, and even these 2 sessions here don't look the most convincing. So Russell 2000, it is above its 210. I think you got to give it the benefit of the doubt here, but it's certainly making, keeping people on edge with the way it's finishing some of these sessions here on Thursday and Friday with those tails on top. But Russell 2000 trying to get this breakout, trying to fill the gap, trying to get back to this old range that it was in for the second half of July. So very quickly had to change gears here. Again, this is why we spent so much time thinking about our retracement plan, our buy the dip plan. When we were game planning this pullback, we spent these weeks here kind of looking at the April pullback, looking at the magnitude, looking at where dip buyers might come back in, right? And thinking about where we would want to pull the trigger in some of our buys. And it happened fast. And that is why we game plan. That's why we think about those scenarios when the market's in pullback mode, is because these recoveries here can happen as quick as they fall. And so we're certainly seeing it this time around. I wish I certainly got more dip buys in. I talked about the fact on Friday of August the 2nd is when I started doing some buying. I did some buying on Monday into that panic. And then I started selling some, though, right into this Wednesday open Thursday last week, and lightening up the load, thinking that, okay, maybe I get another chance to kind of reload back towards these lows or some type of higher low. And it just did not happen. It just continued to fly higher. I had some exposure, not as much as I wanted, but that's always the way it works in markets, right? You always have too little of something that's going up or too much of something that's going down. So all in all, these are the lessons we learned, which informs our decisions the next time around. So S&P 500 market, just generally speaking, short term, certainly heated in the very short term, but repairing a lot of technical damage. We talked about the VIX, and we talked about the fact that this went from north of 60 down to sub 15 and is basically as much of a straight line as one could imagine, sinking like a rock. Anyone trying to dip by this or trying to play for some mean reversion here is getting absolutely steamrolled, and we're coming just right back into the average of, say, May, June, July levels, which were, they were lower from where we are right now. I mean, the VIX was hanging out around 12.5, 13 for most of these months. Let's see if that's the landing spot for the VIX this time around. One thing I wanted to mention too is high yield really breaking out this week. So corporate bonds, again, no credit market stress, no warning signs here. I mean, we're seeing high yields breaking out now. LQD, you could look at it as well. There's a number of other instruments, but lots of, kind of movement up there, risk appetite in terms of treasury yields go and interest rates. If we take a look at the dollar index, again, like we talked about at the start, looking pretty technically weak here, right? Looking like it might want to just roll over again from this latest range that it's been in. That's arguably a net positive for equity markets, and that bodes well for potentially treasury yields, which treasury bonds anyway continue to rally here. Mortgage rates coming down, all these things is perhaps getting in front of the anticipated Fed cut coming next month. So those are some of the good things here. Again, short term, little bit of know what you're buying, know how much ground we've covered, but longer term, certainly getting a nice, nice technical recovery. I want to take a look here at the Mag 7 stocks, right? Because this drives so much of the action. And I thought it was just interesting looking at these charts. They look pretty similar, right? If we look at Apple here, I mean, take a look at the fact of just the way this market has just climbed higher here. It looks a little bit odd, right? A little suspicious. I think this is really what a washout looks like, is when you get a really capitulation type of day, you really exhaust all those sellers, and then you can just float higher for the next handful of sessions. And we're still in the floating process right now. And Apple looks like that. Microsoft certainly looks like that. Although, if we look at Microsoft, I mean, it is much further from its highs. It's still 12% from its highs. NVIDIA looks like this, right? NVIDIA is up 35% from its lows, and it's suddenly now basically 12% from its highs. Remember, this company reports earnings in 2 weeks, and it's certainly going to be highly anticipated there, but nice recovery. And Google is what looks a little bit different. So if you look at all the Mag 7 stocks, Google now is back into sort of lagging mode. Full disclosure, I do have a position here in Google right now. Ironically, this is the laggard of our Mag 7, so I do have a position here, but it is not acting as strong as some of the other Mag 7 stocks right now. There's litigation. I mean, there's some potential other, company specific fundamental factors that are hanging over the stock right now, but for present, I mean, it's certainly standing out here as a little bit of a laggard. Amazon V-shape, Meta V-shape, and even Tesla V-shaping, but still well off of these highs. So I thought that was interesting on the week. Of course, almost everything positively. So NVIDIA clearly the biggest recoverer in the Mag 7. Now, rounding out a little bit more broad-based, I thought it would be fun to just look at some large cap stocks having big moves. Starbucks, new CEO, right, paying a good paycheck to sort of poach the Chipotle CEO here. So that stock, huge move, 26%, 25%, which really frustrates me because Starbucks was a name I was looking to establish in the 60s. I missed it in this initial move. I was trying to be too greedy, trying to get a price into the 60s. And then in this consolidation, I thought, okay, maybe this is the rollover time. I can get it back in the 60s again. And now, of course, it's 94 bucks. So, that's what happens when you really try and be greedy for a few dollars. You miss 25 bucks to the upside. So congrats to the buyers there. Dell is one I do have, actually. So I do, disclosure here, have a long position in Dell. This is one of the things I was dip buying. And this company was up nicely this week, 25% off of its lows. It was in a 50+% correction here. It's up, 7-8 days in a row now. So it's a much tougher chase. But Dell still technically weak, still well off of its highs, but had a nice bounce here. So I do have a position in that, and I've sold some into that bounce. NVIDIA, also we talked about. Micron, nice move this week, right? This is just a simple screen that is looking for large cap and strongly up or above its standard weekly move. Marvell Technologies, another semiconductor here. NU Holdings, huge move, right? From correction of basically 27% off of its highs. It's now gone 43% in a straight line right up towards all-time highs. So NU, very impressive move there. Nike having a nice move as well. Had, I believe, some filings there on some, I don't know if it was Bill Ackman or some fund manager stepping into the decline, causing that to potentially reverse its trend. Another semiconductor here, Broadcom, and then finally AMD. So lots of the large caps that were really experiencing those big moves this week coming from semiconductor land, and then a couple of company specific stories. So that's the roundup. That is the recap this week. V-shaped, VIX collapse. Things are, looking good, or at least repairing the panic that we saw out there, kind of normalizing, right? I would say the market has normalized this week. It probably, the pendulum, as markets always do, swing too far in one direction. So we had a little bit too much panic on the downside there. Of course, easy to say with hindsight. And now we're sort of correcting back up. And we'll see if we're correcting a bit too far and we're getting ready to just chop it out for the rest of August. That's kind of where my head is at on the slightly longer term view of where we are right here. Probably the chase at this point is getting a little frothy, and then maybe we just cool off for a little bit, chop around, and kind of brace for election times and the September months when the trading volumes start to pick back up. So that's the way I am looking at it. Hopefully you are managing this recovery okay. Hopefully you're able to catch a piece of it. As always, I want to thank you for tuning in to our videos. Every Saturday we publish our long form market analysis video just like this. Check out the links we have in the video for more on TC2000, IBD's list, and our own trading systems. Thanks so much for tuning in. We'll see you back here. Have a great weekend. We'll see you back here next Friday. Take care.